Look, I need to be straight with you about something that's happening right now in the precious metals space. And if you're holding physical silver, this concerns you directly. There's a reason why some of the smartest money in the world is staying completely silent about their silver positions. And it's not what you think. Let me paint you a picture of what's actually going on behind the scenes. While everyone's been focused on gold hitting new highs, silver's been quietly setting up for something that could make those gold moves look tame. But here's the thing. The people who understand what's coming aren't talking about it, at least not publicly. You've got to understand the mechanics of what's happening in the silver market right now. We're looking at a situation where industrial demand is absolutely exploding. Electric vehicles need about twice as much silver as traditional cars. Solar panels are consuming silver at rates we've never seen before. 5G infrastructure, medical devices, water purification systems. The list goes on. This isn't speculative demand. This is real, physical silver being consumed and never coming back to the market. But here's where it gets interesting. The above-ground stockpiles of silver, they're vanishing. Not slowly, rapidly. We're talking about inventories at COMEX warehouses that have dropped by massive percentages. The London vaults are seeing the same thing. Physical silver is being pulled out of the system faster than it's being replaced. Now, you might be thinking, okay, so supply and demand fundamentals are strong. That's bullish. Sure, but that's not the real story here. The real story is what happens when the paper market realizes there's not enough physical metal to back all the claims. See, for every ounce of physical silver that exists, there are multiple paper claims on that same ounce. It's a system that works perfectly fine until someone actually wants to take delivery. And right now, more people are wanting to take delivery than ever before. Think about what happened in nickel a while back. The London Metal Exchange had to literally halt trading and cancel trades because the physical market couldn't support the paper positions. That was nickel, a market most people don't even think about. Now imagine that scenario playing out in silver, where you've got millions of retail investors, industrial users who need the metal to keep their factories running, and institutional players all competing for the same limited supply. Here's what the smart money knows. They know that when this situation reaches its breaking point, the price movement isn't going to be gradual, it's going to be violent. We're talking about the kind of move where the price gaps up so fast that you can't even get in at a reasonable level. The kind of move where premiums on physical metal explode to levels that make current premiums look like nothing. And that's exactly why they're staying quiet. Think about it from a strategic perspective. If you're a major player who's been accumulating physical silver, the last thing you want is for everyone else to figure out what you're doing. You want to keep buying at current prices for as long as possible. You want the market to stay sleepy, to stay overlooked, to stay undervalued. The moment the crowd catches on, your opportunity to accumulate at reasonable prices disappears. This is why you're seeing such a disconnect between what's happening in the physical market and what the price is doing. The paper market is still setting the price, but the physical market is telling a completely different story. Dealers are running low on inventory. Premiums are elevated. Delivery times are stretching out. These are all signs of a market that's much tighter than the price suggests. But here's where this gets personal for you if you're holding silver. There's a security element to this that most people aren't thinking about. When silver was trading at $15 or $20 an ounce, having a stack of silver wasn't that big of a deal. But as we move into a scenario where silver could be trading at multiples of current prices, suddenly that stack becomes a significant store of wealth. And significant stores of wealth attract attention. You've got to think about the psychology of what happens during a precious metals mania. Back in the late 70s, when gold and silver went parabolic, people were literally lining up around the block to buy. Jewelry stores, coin shops, anywhere that had precious metals was mobbed. And in that environment, word gets around about who has what. Your neighbor mentions to someone that you've been buying silver. That person mentions it to someone else. Before you know it, you've got a target on your back. I'm not trying to make you paranoid here. I'm trying to make you think strategically about operational security. The people who've been through precious metals bull markets before, they understand this. They know that discretion is part of the game. They don't post pictures of their stack on social media. They don't brag to their friends about how much silver they own. They keep their positions private because they understand that wealth attracts unwanted attention. And it's not just about physical security. There's a regulatory angle to this too. Governments have a long history of getting very interested in precious metals when their currencies are under stress. We saw it in the 30s with gold confiscation. We've seen it in other countries during currency crises. When the system is under pressure, authorities start looking at where the wealth is concentrated. And if you've been very public about your silver holdings, well, you've made yourself an easy target for whatever policies they might decide to implement. Now, I want to be clear about something. I'm not suggesting that you shouldn't own silver. In fact, the fundamentals for silver right now are about as compelling as they've ever been. What I'm suggesting is that if you do own silver, or if you're planning to acquire more, you need to think about how you're managing that information. This ties into a broader principle about wealth preservation. The truly wealthy, the people who've maintained their wealth across generations, they have a saying, wealth whispers. They don't advertise what they have. They don't seek attention. They understand that the best way to protect your assets is to not let people know you have assets worth protecting. And silver, right now, is setting up to be one of those assets that's worth protecting. The supply and demand fundamentals are creating a situation where we could see a significant repricing. Not might see. Could see. And when that repricing happens, the people who positioned themselves quietly, who accumulated without fanfare, who kept their holdings private, those are the people who are going to benefit the most. Let me give you a specific example of why this matters. There's a phenomenon that happens during precious metals, bull markets called the wealth effect. When people see their neighbors getting rich from gold or silver, they want in. They start asking questions. They start trying to figure out who's been buying. And if you've been vocal about your positions, suddenly you're the person everyone's coming to for advice, for information, for access to dealers. You become the local precious metals expert whether you want to be or not. And that creates problems. Because now you're associated in people's minds with precious metals wealth. When silver's at $50 an ounce and your neighbor remembers that you were buying at $25, they're doing the math. They're figuring out that you've probably done pretty well. And that information spreads. It becomes neighborhood gossip. It becomes water cooler talk. And before you know it, you're dealing with consequences you never anticipated. The smart approach is to treat your silver holdings the way you'd treat any other significant financial position, with discretion. You don't go around telling people how much you have in your retirement accounts. You don't advertise your stock portfolio. Why would you treat your precious metals holdings any differently? Quick aside here, if you're thinking about precious metals as part of your retirement strategy, and you've got 100,000 or more in retirement accounts, I put together a free guide on how gold IRAs work. It's in the description. Covers the mechanics of getting physical metals into a retirement account without triggering tax penalties. Worth looking at if that's relevant to your situation. But back to this security issue. There's another layer to this that's worth understanding. The precious metals market has always attracted a certain element of, let's call it, aggressive acquisition. When metals prices are rising, theft of precious metals increases. It's just a fact. Burglaries targeting coin collections, home invasions where the perpetrators clearly knew the victim had precious metals, even robberies of people leaving coin shops. This stuff happens more frequently than most people realize. And the common thread in a lot of these cases? The victim had been public about their holdings. They'd posted on forums about their stack. They'd shown pictures to friends. They'd talked about their purchases at the local coin shop where anyone could overhear. They'd made themselves a target without even realizing it. Now, contrast that with the approach taken by serious precious metals investors. They buy from reputable dealers who respect privacy. They store their metals securely, often in multiple locations. They don't discuss their holdings with anyone who doesn't need to know. They understand that operational security is part of the investment thesis. And here's something else to consider. We're moving into a period where financial privacy is becoming increasingly rare. Everything's tracked, everything's monitored, everything leaves a digital trail. In that environment, the ability to hold wealth in a form that's private, that's not on a database somewhere, that's not being monitored by algorithms, that's actually becoming more valuable, not less. Physical silver gives you that option, but only if you're smart about how you acquire it and how you manage information about your holdings. If you're buying from dealers who report every transaction, if you're using payment methods that create obvious trails, if you're talking about your purchases where others can hear, you're defeating the whole purpose. The institutional players understand this. When central banks buy gold, they don't announce it until months or even years later. When major funds take positions in physical metals, they do it quietly through private transactions. They understand that information is part of the trade. The less the market knows about what they're doing, the better their execution, the better their average price, the better their ultimate outcome. you should be thinking the same way. Your silver position is your business, not your neighbor's business, not your coworker's business, not social media's business, yours. And this becomes especially important as we move into what could be a very volatile period for precious metals. The factors that are driving silver higher, the supply constraints, the industrial demand, the monetary instability, the geopolitical tensions, these aren't going away. If anything, they're intensifying, which means the probability of a significant price move is increasing. When that move happens, you want to be positioned, but you also want to be positioned safely. You want to be able to benefit from the repricing without painting a target on yourself. You want to be able to make decisions about when to sell, if you decide to sell, without everyone knowing your business. You want to maintain your privacy and your security while the market goes through whatever chaos it's going to go through. Think about what happened during the last major precious metals bull market. People who'd been accumulating quietly did very well. People who'd been public about their holdings, some of them did well financially, but they also dealt with a lot of unwanted attention, a lot of security concerns, a lot of complications they hadn't anticipated. There's a reason why the old money families, the ones who've preserved wealth across generations, they don't talk about what they own. They understand that discretion is part of wealth preservation. They understand that the best security is not needing security, because nobody knows you have anything worth securing. And silver right now is setting up to be exactly the kind of asset that requires that level of discretion. The fundamentals are strong enough that serious money is accumulating. The supply situation is tight enough that a repricing is becoming increasingly likely. The monetary environment is unstable enough that precious metals are going to attract more attention, not less. In that environment, the people who are going to do best are the ones who understand that silence is part of the strategy. The ones who accumulate quietly, store securely, and keep their positions private. The ones who understand that in a world where everyone's broadcasting everything, the ability to keep something private is actually a competitive advantage. So if you're holding silver, or if you're planning to acquire silver, think about your operational security. Think about who knows what you're doing. Think about what information you're putting out there. Think about how you're storing your metals and who has access to that information. Think about your long-term security, not just your short-term gains. Because here's the thing. The price move in silver, when it comes, it's going to be significant enough that it's worth protecting. It's going to be the kind of move that creates real wealth for people who positioned correctly. And real wealth requires real security. Not just physical security, but informational security. The kind of security that comes from discretion, from privacy, from keeping your business your business. The smart money gets this. They've always gotten this. That's why they're quiet. That's why they accumulate without fanfare. That's why they understand that the best trade is the one nobody knows you're making until after you've made it. And that's why, if you have a silver stack, you should probably keep it quiet. Not because there's anything wrong with owning silver, but because there's everything right with protecting what you own, with maintaining your privacy, with keeping your strategic positions to yourself until the time comes to act on them. The market's setting up for something significant. The people who understand what's coming are positioning accordingly. But they're doing it quietly. They're doing it strategically. They're doing it with an understanding that information security is part of investment security. You should be thinking the same way. Your silver position is your edge. Your privacy is your protection. Your discretion is your defense. In a world where everyone's talking, sometimes the smartest thing you can do is stay quiet and let your position speak for itself when the time comes. That's the real safety play here. Not just owning the right assets, but owning them in the right way. Quietly, securely, strategically. The way serious money has always operated. The way wealth has always been preserved across time and across market cycles. So keep your stack quiet. Keep your strategy private. Keep your security tight. And let the market do what it's going to do while you're positioned to benefit without broadcasting your position to the world. Because in the end, the best investment is the one that not only grows your wealth, but protects it too. And protection starts with discretion. Always has. Always will.